Hello traders, welcome to another interview with one of our FTMO traders, and today it is Paul from Glen Ellyn in Illinois, US. So, hello Paul, pleasure to have you here. You're a trader with the highest payout from FTMO ever, so welcome.
Thank you. Pleasure is all mine. It's truly a privilege.
Okay, and by the way, guys, for those of you who don't know, FTMO is a proprietary trading firm, and we are looking for experienced traders like Paul, who, upon passing our evaluation process, get to manage an FTMO account of up to $200,000. So Paul, I'll just get to my first sentence. You are a trader who received the highest payout ever, thanks to your work on your FTMO account. So let me just mention the numbers. On the first FTMO account, it was the profit made was $500,000, and on the second one it was $192,000. So again, let me just take my head off for you. A good job.
Thank you. Thank you. I really appreciate it.
Okay, so before we get to the actual trading, tell us a bit more about your relation to trading. How did you start a trade? You obviously must have a lot of experience. So where does it all come from?
Sure. So it actually all started in 2013, and it came from a lot of lost accounts. So I self-funded my own forex accounts with some with varying margins and leverage, and so I was able to kind of navigate, like all traders, um, just the process of trading the different indicators and seeing how they work, and whether or not the strategies that I learned at the time would work. And unfortunately, I was using live money, so I was using
Mm.
my own money to kind of navigate through all that, and so experienced quite a bit of losses. And so that was where it all started. I tried to recoup my losses and just ended up with even more losses. So it was a rabbit hole that was quite deep. And so I had to, at one point, put a stop to trading and kind of focus on myself and the journey that I was on, and whether or not this was actually for me. And so that's kind of where it all started. Yeah, in 2013.
Okay, so that must have been really demanding, like psychologically, because as you're saying, a lot of people are thinking that, or a lot of people are seeing Forex as just, clicking and the money's automatically rolling in, and there you were, lost quite a bit of money, and you had to figure out whether you actually want to do it or not. So, uh, what was it that, persuaded you, that made you actually, want to keep on going with Forex?
Sure. So it was a number of things. I was a really I was really interested in the entrepreneurial aspect of trading. That you are your own boss and you're able to just have your own schedule, and so that's from all the YouTube videos I saw at the time. At least that's what was advertised. And so back then, actually, there was a lot of binary option
Hmm.
type of videos that were advertised on YouTube, and so I kind of delved into that. But I was actually more focused on the options side of trading, so it wasn't even forex at the time, but then it progressed to forex, and so then I had started my own forex account, and just because I looking at the different um, trading trading avenues, it seemed that forex was a little bit more applicable to my schedule, just because there are different sessions, and so each one has their own or has its own volatility, and so that's kind of what I was looking for, at least for my schedule. And so that's where it all started. That I came to the decision to trade forex, but how I guess the pursuit of trying to understand and learn everything I could about forex, and really to recoup my losses was to was just I had this one sole mission, and that was to break into the forex trading world and learn everything I could and understand why I lost so much. I was newly married, and so I wanted to impress my wife. So I was actually on a mission to save for our down payment for a home, and that was just something that I wanted to really just impress her with, my trading skills. And so I was doing really well in the early phases of the trades, but I really didn't understand lot sizes and
Hmm.
leverage and how all that was used, and really the volatility that's in forex, or that could happen in forex. And so I was just simply over leveraged on some trades, and that uh, ended up taking my account back to zero. And so it was just that learning process of not securing profit, or securing profit and then over leveraging,
Hmm.
just because I was under the assumption that the trades will keep going, and that I was in the right trend, or just whatever psychology I was under that made me assume that everything is going my way. And as we all know in forex, that the assumptions of a retail trader are just that, they're just assumptions. So
Yeah.
at any point, everything could just stop, and so you always just have to be humble about where you are in the trade, and kind of take the small profits that are given to you or given to me. And so that's kind of where that journey started, is trying to recoup my losses initially, and then just learning as much as I could about the different strategies.
So, as you were mentioning, you were also trying options before Forex. So it seems to me that you were always interested in like different financial assets. So I'm just wondering, do you have any financial background regarding your education or any job that you worked in or work in right now?
Sure. So no real, a licensed financial background, but I did, pursue licensure. So I wanted to understand what the licensure process would be, and if that would be my goal. Just because my just my understanding, or the way that I see the markets, I want to understand the things that are driving the market. So a lot of that I assumed back then would be that I would pursue licensure. So I would be a licensed broker, or at least go into that field. But later on, I discovered that a lot of licensed brokers actually may not understand everything there is to know about trading. So so that's what had kind of shifted my focus to the technical aspect of trading. And then also, since I was still really interested in learning everything I could, a lot of my focus was on the commitment of traders report, along with the economic news. So that's really where it's split. It's really kind of in the middle, where I'm really focused as much as I am on the technical aspect of the trade. I'm really focused on economic news
Hmm.
and the commitment of traders report.
Okay, so you're most definitely a fundamental trader.
Correct. Yes, I'm first a fundamental trader, and then secondly a technical trader.
Hmm. All right. So let's fast forward a bit. You started trading with FTMO a little over 6 months ago, and I believe it was this January when you received the first FTMO account. I assume before FTMO you were trading on your own private account. Uh, did you have to adjust the way you trade with FTMO, or was it pretty much the same thing still?
I did. I had to adjust my lot size and my risk with FTMO just because of the 5% daily drawdown, or just a max loss. So that was not something that I was used to, and so I had to really. I had my own risk ratios,
Hmm.
but I think that FTMO's risk ratios were a little bit better than what I had, and so I had to just tailor all of that risk to even my own account, my own private account. But so that's where I had to experience the I guess the trader's shock as well. Even someone with with my experience of 10 years, that could even lose a challenge account with
Yeah.
FTMO. I thought my start with FTMO would be all successful, and everything would go my way. And so I did have some failed challenges, and but after I understood all of the risk, and um, how to properly navigate with that daily drawdown, or the max drawdown, I was able to successfully meet the challenge and the verification goals, and then just continue with my live funded account.
Okay. Well, considering your results, it seems that you have adapted quite well. So you have mentioned that you're also trading on your own life account. So is that correct? You're trading on FTMO account and then separately on your own life account as well.
Correct. Yes. So as I was saying before, that I was more of a fundamental. Well, I guess I'm kind of split even, but I'm focused on fundamentals. So my personal account is really a long term account. So I guess I could be a long term swing trader. And so with that account, I use lower leverage
Hmm.
than I do on the FTMO account, just because just the way that the withdrawal works with FTMO. I'm limited in terms of what I can hold.
Hmm. Okay, I see. And also one more field that I would like to, explore a bit more is the psychology part because the more interviews we have, the more we hear about how important the psychology is. And considering your experience trading for 10 years, how would you describe that, your psychology has evolved?
Sure, it's grown quite a bit. Where my first few losses that I had really just put me into into severe depression, or at least borderline depression,
Yeah.
just because I was using live funds. So this was my own savings, my own family savings, and to be quite frank with you, it was my wife's IRA. And so I had used all of her funds to to fund the account, and to show her where I had grown the account, and then to lose it all was even a double whammy. I mean,
Oh.
it was a severe loss, and so I really had to just focus the on this whole pursuit of trading, to begin with. So I had to just really understand what was I trying to accomplish. Were my few trades just luck, or was this a skill that I could kind of zero in on and develop, and if the strategy was even real. So yeah, it was just a lot of self discovery, and just a lot of back testing strategies to see what would work and what wouldn't work. In a cookie cutter fashion,
Hmm.
if I can describe that. So I know that it doesn't always apply, but I was always trying to find a cookie cutter method to the trade.
Okay. Do you think the way your psychology has developed in the past years, in trading, has that helped you in your private life as well, in some sense?
I am a lot more patient with my son. He's 4 years old, and so yes, I can definitely say that that trading has taught me a lot about patience, a lot about also discovery and learning it, and trying to see what drivers exist behind that trade. So I'm always doing a lot of back end analysis, and so really in my personal life, I'm always I'm also just a very inquisitive kind of person, and so I like to learn a lot and try to find out things that are behind the process
Okay.
of things. And so, yeah, I could apply, trading to my personal life in terms of, just the discovery process of what's behind certain things. And yeah, so I think it all applies.
Okay. All right. So here we are back with Paul, and we have Euro JPY open here. As we talked about a bit before, Paul made a lot of money on JPY, on shorting Japanese yen, and on S&P 500. So yes, Paul, go ahead. So tell us a bit more about your setups.
Sure. So this is the basic analysis that I use with two simple indicators, the RSI, and I customize the RSI to the 12 setting, and then just a standard MACD
Hmm.
with 4, 18, and 9 setting. That's just custom to what I'm looking for. And so I currently do a top-down analysis of each stock. So I was uh, during the during this trade that I took both on the Euro JPY and the US 500. I was really focused and patient to allow the markets to kind of direct the price action, and before taking part in all the price action, I wanted to see what is currently going on with the overall trade. And so I would look at the monthly chart to see what's going on with the monthly chart. So when we look at the monthly chart, you want to see where are the uh, price action and the liquidity areas most likely going, and or would most likely retrace back to. And so if I'm looking to buy, I want to just kind of pinpoint where those areas of support or resistance would be. And so this was where we found ourselves in the monthly chart, um, in this breakout. Okay, and so what we do here is let's move on to, I'll just kind of in here. Okay, so what or zoom out. So what we see here is in the 2012 to 2014 areas, we see that prices are breaking upwards, and you see that the RSI is already stretched, and so this could be quite intimidating for for traders to enter this trade when the RSI is already almost at overbought areas. But what we're seeing is that price uh, comes down. So once it breaks out above the previous high, when we look left, it comes out and then it comes right back down to test the support, and then it continues higher. Okay. And so we continue higher. And so in this same situation here, we break out with this candle, and then we come back down right here on this candle in May, and then in June we're now breaking out all of this price action. So now we're breaking out, and so this is what I was looking for. And so in the same situation here that took several months to resolve, it broke out. What happened in 2 to 3 months happened in 1 month. And the reason for that is because of the interest rates that
Mm-hmm.
are currently rising at a astronomical rate. And this is what I was concentrated on uh, with the fundamental data that I was looking at from economic news and the Commitment of Traders report. And so I want to see exactly what's driving or what's going to be the driver for further upside. So while these indicators are very important at a on the monthly and the weekly and the daily chart, they're not as important as
Mm-hmm.
they are uh, when you're looking at the charts for the 15-minute and the 5-minute intervals. So that's when I look for where is price likely to come in for support, and then I come into the lower time frames on the 4-hour chart. So I could focus on the daily as well, but I want to kind of go back into the 4-hour chart to see where is the support likely going to be from traders that are going to be buying this, because I don't want to be buying a asset or a currency pair that is plummeting. I want to make sure that I wait for support first.
Mm-hmm.
And so what that helps me to do is to be patient with the trade. So I'm not buying a falling knife. Um, that's something that I generally want to avoid. So I have to wait, and this forces me to be patient. And so on the 4-hour chart here, we see that this is selling off. And so where is my so here I'd like to look at the daily chart, and this is on this candle here in May. Let me zoom in here for May. So here's our breakout candle in May, and I'm sorry, in April, right? Because April we have our first interest rate hike,
Mm-hmm.
um, and then we have a retest. Okay, and so going to the 4-hour chart, this is the retest here. All of this price action was a retest. And so it ends up going all the way down to 132. Now I did not buy it at the low. Uh, here here was the first green candle, um, and this still is not a confirmation for me to buy.
Okay.
Although you have a MACD that's curling upward, I I could have bought it, but that's not my intention. My focus with the indicators is to ensure that I'm looking for the divergences that are happening while the stock is selling off. So am I able to see any divergences yet on the 4-hour chart? So since I'm not able to see any divergences yet here on this green candle after this sell off, I know that we're pretty close, because when we're looking at the monthly chart, the support here would be at 133 area, 133.80, and we could kind of come down to the upper wick here, and that's at 132.80. Okay, so anywhere in this zone, and that's kind of what we see here. We see the sell off, continue all the way to 132.80,
Mm-hmm.
132.86, and then you have your first green candle. And so then we can go on to our 15-minute chart. I like to use the 15-minute chart just because it's not as volatile as the 5-minute interval, and still gives you a decent amount of charting data to see what's happening with the overall trend. And
Mm-hmm.
so this is all of the selling that's going on here on this 4-hour chart. So here we have our positive divergence happening on this RSI, right?
Yeah.
So as the price comes down, we see that price flatlines, but RSI continues higher. Okay, and then we also are supported with just our MACD. Our MACD is also continuing higher, And here we have just a positive uptrend. And then also here on the larger perspective with the RSI is also continuing higher. So here we have positive movement in price, positive movement in RSI. So everything is coinciding with what I was already expecting for price to have the support. And so this is what I want to look for in a corrective, kind of environment where prices are selling off and lots of panic is created in that environment. And so you just want to be patient and not over leverage with the trade or going in too soon, just because your RSI could already have bottomed here.
Mm-hmm.
But one example with this situation here is that you buy on your first green candle on the 15-minute chart, but then prices continue selling off. And if you're over leveraged here, this is a 100 pip, close to 100 pips, selling. So you could essentially liquidate the account. So here I want to make sure that I'm waiting for this positive slope in price. Okay, so especially here where price is flatlined and it's kind of stalling, this helps to ensure that uh, I'm just waiting, and I'm not going to be susceptible to
Mm-hmm.
additional downside. But even if I was susceptible to that, I would make sure that my risk was limited to just underneath this area here.
All right.
This selling. So that's generally what I was looking for, and so this is what we got. And now my entry was not actually done uh, on either chart. I would have to just go on to the 1 hour to show where we were in that trade. And so here we are on the 1 hour chart. And so my entry was actually a little bit closer to 134, 135 zone. This is actually where I took the entry. And the reason for that is because I saw that we had positive slope in RSI. We had a positive slope in price. And so referring back to the monthly, I just wanted to make sure that this would hold our support. And so we can go back to this 1 hour chart, and why this was so helpful for me is because uh, the same data that we see here for the MACD, the positive slope that we have here, we actually have a repeat or an entry point for traders to take, because we could enter here with a positive slope in RSI, and we see that the MACD is curling upwards. It's
Right.
trying to basically just come up, and so this positive slope, the positive RSI, the flat line in price on the 1 hour, kind of mirrors what this flat line on the 15-minute chart looks like. It's flatlined, but yet you have a positive slope. And so the continued price action, is for higher prices. And so if you enter on the 1 hour chart, that allows for you to get into the trade with a stop loss, anywhere between 30 to 40 pips. And so you could really, guarantee or safeguard yourself from lower prices. And so you could, uh, have an entry that's fairly, um, that's fairly, I guess, safeguarded as much as you can. And no one really knows, but in terms of what you're expecting price to do, you're just trying to limit your downside. And so I felt like this would be a good area for an entry, just because this was repeating on the 1 hour chart, which is what we had on the 15 and the lower time frames. So
Okay.
once that establishes, we can just get into the trade and enjoy the trade back to higher prices.
So before or always before you enter a position, do you always make this sort of analysis on the multiple time frames?
I sure do. Yes. So I want to just ensure that that we are doing the the resistance and support levels from our top down view, and so you can see where the majority of your support and resistance would be on a monthly chart. And if you
Mhm.
can't see that on the monthly chart, if it's a little bit too hard to see, you can kind of zoom in on the weekly chart and see where the support and resistance are. Really, I use the monthly chart as a macro view of the trade, because really I'm using the big support resistances from the monthly, and then I just go on to the 4 hour chart and the or perhaps even the daily chart and then the 4 hour to give me the zoomed in picture of where that trade is going. Now, this isn't only just applicable to this particular currency pair. You know, um, this is something that I do on on other currency pairs. But the reason that I did this for specifically for the yen pairs is just because we had a rising rate hike for a lot of different currency pairs that were affected, by the yen pairs. So that's really what I
Mhm.
wanted to focus on. I wanted to focus on this breakout. I was looking at the 2012 2013 area, and this was the ideal pullback that I was already expecting, along with the fundamental outlook that I had as well, that's currently happening. And so this is what helped me, kind of navigate the overall trade, just because I saw the positive development. You also have the rising rates, and so this is just what helped me, enter the trade, or uh, what gave me more confidence in this trade. Not the technicals,
Mhm.
but really the what was displayed on the technicals, but supported by the rising rates, along with the fact that we came down to support, and then now we have that positive slope on the 1 hour and then on the 15-minute chart.
Yeah, if I'm not mistaken, the situation with the Japanese yen is that despite pretty much all the other central banks raising the interest rates, right, because of the inflation, the
Mhm.
Japanese central banks, it doesn't really, increase the interest rate that much as the other
Right.
currencies, right?
Yeah. Go ahead. I'm sorry.
No, it's fine. I mean, that's just one thing I wanted to point out, which seems like interesting to me, because I think that the rate remains at like two point something percent, which is and this is why we see the Japanese yen going down. So yeah.
Yeah, yeah, you're totally right. It's the fact that you have the euro that's rising, so we have interest rates that are rising in Europe and also in the United States. And so when this is happening, that forces the Japanese yen higher. And so we have the commitment of traders report that I look at.
Hmm.
And so this is from the website that you can look up. That's CFTC.gov. And so I just basically scroll down and I look at the let's just see here. Okay, so I'm looking at the yen, and I'm specifically focused on the non-commercials and what's happening with the non-commercials. These are the traders like the hedge funds and the big banks. So commercial side is uh, the companies that sell products, and they have to pay for their products in yen, and
Hmm.
so they want to protect themselves or hedge themselves against the fluctuations of the yen pair. or in the yen denominated, yen dollar, I guess you can say. And so I'm focused on the non-commercials because these are the banks and the big hedge funds that are trying to make a profit on on this particular asset, right? So when you also have another outlook here, the non-reportable positions. This is the the retail traders like myself. They're currently short on this pair. You see that the commercials, the companies that are trying to protect their products just because they have to pay in yen, so they're long on. They're mostly positioned long, and most of your Japanese or most of your hedge funds and your uh, big banks, they are currently positioned short on
Mm-hmm.
the yen. So looking at the euro, they are uh, they are positioned. So just coming right back down here for non-commercials, the banks and the big hedge funds, they're they're mostly positioned. Well, they're actually kind of split down in the middle here.
Mm-hmm.
And so this is the commercials, meaning that these are the companies that are. So they're also kind of positioned kind of in the middle. They're a little bit more short, but really I would say they're right in the middle. And the retail side is mostly on this. They're leaning more long on this. So this is kind of where I'm getting my data from. I'm trying to find out what's driving this, and what are the big banks and hedge funds doing. And then I just basically come back to where we currently are and what the economic news is. And when you have rising interest rates for Europe, that's going to drive the euro down, and that's going to drive uh, the yen pair higher, right? So that's really where that where that uh, where that thesis
Mm-hmm.
was out of. The fundamental outlook uh, was for me to enter this trade based on what I currently see happening, and this is updated weekly. And so that's what helped me kind of get a better understanding of what would happen in this environment when we have this pullback to retest our support. And then just coming back to the lower time frames, I was able to kind of catch this trade once it came back down and showed the same signs as it did on the 15-minute chart. And so kind of taking all of this data together gave me the confidence to enter this trade
I
the way
see.
that I did.
Yeah, so you really need to have like a complex picture of what is truly happening, right? Because just drawing some support and resistance lines just isn't simply enough. I mean, yeah, I mean the CFTC report, that's something really that I think can be super helpful if you actually combine using the fundamental data plus the analysis that you just showed us. So yeah, that's just really nice. One more
Mhm.
thing I wanted to ask about. I mean, you have shown us how you determine when to enter the position, but how do you know when to exit, right? We've been talking about patience, so how does that work for you?
Sure, sure. So the way that I do it is with just basic fibs. I use Fibonacci tools to kind of get me into the trade and out of the trade. So the Fibonacci tool that I like using is mostly on the like on the 1 hour chart. And so here is a simple trend line that you can do. And so you could either do this trend line because I was entering here, doing a trend line here, would have made sense, just because you have a nice clean,
Yeah.
uh, you know, um, resistance, and then it sells back down. So you can do something like this, right? Now So once I enter, it's not really based on this particular trend line, just because it's really an imaginary line of sorts for me. Really, what I'm entering on is this positive slope in price, right? You have a positive slope in price with the MACD, and so uh, this kind of trade on a longer uh, time frame helps me understand where price is more likely to be headed. Is it going to head back up to this previous high? So that's kind of generally where I'm focused on. I'm not really focused on this trend line, although you can. So, but this trend line would be a very nice area for an entry, just because then after doing that, I could have an entry with a extension, and so you'd have your um, your first point of your Fibonacci here, and then you'd have a pullback, and then um, you could either do this 100% take profit just below this previous top, or you could take profit here
Hmm.
at the 168, or I'm sorry, the 161 extension. So this would be a very reasonable, take profit area, and that's kind of what happens here. Is you just stay in the trade, and then take profit when that happens. And this is generally what I do. Is I will take partials uh,
Okay.
in in the different areas at the 100% extension and the 161.
How many
Uh,
partials do you usually take?
So I spread out my lot sizes, and I don't enter the trade all at once.
Hmm.
I like to be able to take partials as we get closer and closer to the price, and so it could be depending on where the particular pair is headed. Like, I knew that with this particular trade, I was more focused on the longer time frame, not really the shorter time frame, but the longer time frame, just because what I witnessed here is that once we had this retest, we had a breakout, just a massive breakout of all of this price action that preceded this. And so this is the same thing that was going on here, and this is the end result. And so I was really focused on the long term aspect, but I also want to protect myself on a shorter time frame, just because you want to have some reserves. Not that uh, it would kind of vanish, but just from all of my trading experience and everything that I've been used to, I want to make sure that I pay myself
Hmm.
and not just enjoy seeing profit on a screen. So it's very important that I take these small take these small trades, and then secure here at the 100% extension. So even if I enter, let's say here, if I missed this entry here at the bottom, um, I would still, and I would, let's say, enter here. You still have a positive slope, and I would still exit at the 100% extension.
Okay.
Okay, and then if I was still in the trade with more lot sizes, um, I would exit at the 160 161.
Okay. All right. Here we are with the S&P 500, which was a very successful asset. So go ahead, Paul.
So this was the trade that I was looking for to the downside, because we were just on the eve of the interest rate hike, and so we had come up to an area of resistance, because we had the previous liquidity zone here that was a resistance for this area, especially that we were going to have this rate hike. And so just the looming rate hike that was approaching, and the resistance that we are seeing, and the negative divergence, we see a RSI that's sloped downward while price is trending sideways. And so here we could see that price is generally sideways. We see that it's finding a little bit of support here, but then it's more of a sideways trading with a RSI that's sloping downward. We also have the MACD that's sloping downward with with crossing. So that's where I was really focused on to take this trade. We have a uh, an environment that is going to increase interest rates. So because interest rates are rising, the U.S. dollar will weaken, and so this is, or I'm sorry, that interest rates are rising. That means stocks will fall, and so the U.S. 500 would also fall, especially since we have this this resistance.
Mm-hmm.
And like I was saying, the indicators are pointing that we're going to have selling any time into, or at least that's what I was expecting that would happen. And so then going in on the shorter time frames, we see that the RSI is also, you can see that very, very slightly, where we come up to this price action, and every time that it gets up to previous highs, it struggles, but the RSI doesn't make it to previous highs. It actually just trends lower and lower and lower. And so this is kind of what I'm looking for. I'm looking for this RSI to continue lower,
Mm-hmm.
and this gives me confidence to enter the trade, because we have the rate hikes that are coming up. So this is where I took this trade. And the 15-minute chart, I really didn't use this much, because the confidence that I got from the 1 hour and the 4 hour chart was enough for me to get this entry. Just because, like I said, we had the different factors that we're going to approach the following week. Now, what also helped me take the trade was the S&P. So we have the SPY ticker, and this SPY ticker had gaps in price. So we had a gap here at 405. We also had a gap here at 397. Okay. So all of this was a target area, or a target zone for me. And so this is kind of what I was focused on with US 500. That although US 500 doesn't have the gaps in price, the SPY did.
Mm-hmm.
And so this was really um, all of this was just a culmination of different factors that helped me make this decision to get into the sell. And what I used here for an entry, or I'm sorry, a target, was just a basic, you could say, um, uh, just a basic wave analysis here. I used this entire move up as the move down,
Mm-hmm.
right? So here we go. We move up, and then we're also going to move down. Now, I did secure profit a little bit early. I secured profit somewhere around here, when we got to the new lows, because I felt like, uh, this was really a trade that I just wanted to capture, to complete this wave. Just because you'll see this kind of repeated often, where these waves get, this is like the 100%. I see this as the 100% extension on the fib. Um, and most often you'll have this repeat over and over and over again. Like this wave here, will this small wave here will get repeated here, and then it'll end here. And so, like, these little waves
Hmm.
I could take, to the downside. But that's not really what my focus was. My focus was always just to, to take it down to this gap. But the fact that we had gapped down the following day, and this was before uh, the U.S. market had opened, I had thought that we're going to complete this entire move to the downside, and that's kind of what we did. And I just ended up securing profit a little bit before. I'm not really picky in terms of where I secure profit. I
Hmm.
just want to secure something in order to protect the investment,
Okay.
or to protect to realize the profits that I've earned.
The settings that you currently have, the RSI, the MACD, and the Fibonacci as well. Is that something that you use with all instruments?
I do. I use the Fibonacci tool, quite often, because just because it gives me a just an area that I can target. So just as an example, we have on the 4 hour. This is preceding the rate hikes. So this was May 25th, right? So the market has to do something. It's not just going to continue selling at all times. And so we can use the tool both for upside and the downside. So when we see, or when I see, the positive slope on the RSI, and we see that price is respecting that, also we see that price is continuing higher. So this would be my first point of where the trend starts, and then it this would be the second point, and then this was my third point. So we can see here that it creates this you can call it a hammer candle right
Hmm.
here on this. I could zoom in a little bit. It creates a hammer candle, and this is a strong indication. Just some basic charting candles that indicate that price is likely to continue higher. And so, if I was to enter on a buy for the US 500, this would be a likely area for me to enter on this third point, right? So 1, 2, 3, and then we have the rising RSI along with this positive candle. This would be a good entry with a stop loss just underneath this wick. So I could do perhaps 25 pips or 30 pips just underneath this wick, and then I would close out at the 100% extension, and ultimately the 161.
Hmm.
And this is kind of where the price uh, struggles, and we see that there is negative divergence in price, and this was kind of expected also, just because we're entering, like I said, we're going to enter the rate hikes the following week or the following 2 weeks. And so this is exactly what happened. The price just has to fluctuate and kind of do its normal trending that it does. Just because in any environment there is always going to be buyers and sellers, and so this is generally what happens at all times. Um, and So ultimately, that's what led me to use the Fibonacci tool, just because it's widely used, it's popular, and so I'm not going to fight the trend. I'm not going to
Hmm.
fight the tools that are currently already in use, and try to make up my own strategies that may or may not work. I just know that a lot of traders are using it, and so if everyone else is using it, then it should be it should be given some weight,
Yeah.
to use in other currency pairs.
Okay. Now regarding the RSI and the MACD, do you tweak the settings, or do you change it if the conditions require to do so?
I generally do not change the RSI. I like to keep this because this has given me um, such a positive experience in my back testing that I did before, uh, where where previously, if I were to alter the settings to fit the conditions, then I'm really not being true to the indicator. So
Hmm.
I would like to have something that's always constant. And here I would just like to point out that what the the 12 RSI does for me at least is that it helps me to see on a shorter time frame. So meaning the time frame that the period that the RSI is using. I know that the default one is 14, but the 12 just helps me kind of zero in on where are these positive divergences happening. So we see that price is continuing lower, but we have a positive slope in price, and we have a RSI that's also trying to curl upward. And along with this MACD, I'm sorry, the MACD is curling upward. And along with this MACD, another benefit that I like is that I like to enter on the second. Uh, I guess you can call it a cross. So on the second crossover, not this first one, but on the second one, along with a positive slope on the RSI.
Mm-hmm.
So once I see that, I could have a stop loss that's 30 pips. Generally 30 pips. Or sometimes it could be up to 50 pips, depending on what lot size and what risk I'm using.
Mm-hmm.
But I definitely don't like to trade or don't like to change the settings just because I wouldn't be true to the indicator and the environment that I'm trying to that I feel like I'm trying to force something to happen
Yeah.
that's not really happening, and that's forcing a trade is never a good outcome.
Yeah. Just don't mess it up if it works, right?
Yeah, exactly right. Yeah. Mhm.
Okay. One more thing. You mentioned that this settings gave you a good results in backtesting. So I'm wondering, do you still backtest, and how do you backtest?
Sure. So I do back test, and one thing that I do is I use the currency pairs that so with the euro, Japanese yen pair, then I'll use the New Zealand, and so I'll stick to four, but the British pound, Japanese yen is one of my other favorites. So here, what I'll do is uh, I'll also see what is currently happening in this environment. I know that not everything matches, just because the different time frames that we were using. But what I like to see is so if I will just change all of these to the 1 hour. Let's change all of this. I'm sorry, this is taking a little bit longer than I wanted to, but I will change these very quickly.
Another question, while backtesting, are you using your own account, demo accounts, or do you backtest on your FTMO account as well?
I am I'm not really back testing on the FTMO account. That is only something that I do on the demo accounts
Mm-hmm.
that I have. But once I back test a strategy, um, or particularly this strategy, I don't try to go that far into my back testing. I try to stick to what's currently happening, just because the environment is the same,
Okay.
right? We have rising interest rates, and so the Japanese yen is going to be affected by that. And so what you can kind of glean from all of this is that if something is going to work for one, it's going to work for another.
Yeah.
And so uh, let's see with the euro JPY. So this would have been right here at this entry. So let's say this would be on May 19th, or we can say May 20th. Anywhere in this area, we could just zoom in on this. Okay. So, and we'll just go back to May 19th, anywhere in this area. All right, so here's that, and then we'll do the British pound, Japanese yen. This would be here. Okay, perfect. All right, so here we go. So if this would work for the Euro JPY, right? I'm going to kind of do the same thing here. We'll do our trade here. So this pair, the New Zealand Japanese yen has a bit of a longer third point, but
Mm-hmm.
I'm just for the sake of this trade, I'm going to mirror what happened. Oh, so I'm sorry. The third point would be on May 23rd. So let's just mirror the. So I was right on this one. So it would be somewhere May 23rd, somewhere in this area. So I'm just going to do this one. This was not too far off. So this should kind of mirror itself.
Mm-hmm.
And in this trade, well, this trade wouldn't have worked out. This trade would not have worked out on the Canadian Japanese, but we do have a pound yen pair that would have worked out. So we have okay. So this would have worked out for us if I had taken this trade on several of these currency pairs, just because you have a similarity in movement where you have price that's that's coming down, but it's not coming down below the initial
Mm-hmm.
start of the trade. And so the same thing happened here where it comes down, it goes up, but then it does fall back down. Same thing happens here. It goes up, but then it does break, and this trade would have been a loss, and this trade would have worked out just because none of the trades when they came down would have taken out the stop
Ah.
if it was placed anywhere at 25 to 30 pips below this price. And then your price would eventually I would take partial at the 100% extension, and then the 161 here. This would have been a loss. This would have been a win. So I would secure partials, regardless. And then we can see here that it goes up to the target, and then obviously continues higher. And then same thing here. It kind of comes to the target for the 100% extension. Kind of comes down a little bit, but then ultimately continues higher. And so this, I have to just to have confidence in what's currently happening, and why it's working is that we have uh, a widely popular tool that many traders are already using. So I'm not going to try to invent something new.
Mm-hmm.
And also because of the rising rates in that environment, along with the the top down analysis that I was alluding to on the monthly chart that showed we had a retest of resistance that is now support on the monthly chart. And so that's really what gave me that confidence into taking these trades, and then ultimately also securing these partials, just to ensure that I pay myself
Mm-hmm.
and that I'm just being a responsible trader.
Mm-hmm. That's actually one of the things that seemed interesting to me because during your trading period at your FTMO account, I saw that you took a lot of trades, but at the same time, I'm seeing that you really, have to be 100% confident that it's going to work out, that you're really, using confluence of multiple signals, fundamentals, analysis like this before you actually, before it's enough for you to say, okay, this is going to work out. So, yeah.
Yeah, you're exactly right. It's you have to use, like you said, a lot of confluence. You can't enter, or at least for me, I cannot enter just on a whim, um, or just on a guess, or on a economic news report. Because also another thing that I wanted to point out is that I think something that's going to be just invaluable for for a lot of traders is that we had a recent economic news report for I believe this was for the yen.
Mm-hmm.
So Japanese yen had I think the bank had a interest rate report on this day, and we can see what happened with this with this candle. And so if we zoom in, so let's just zoom in real quick. So you can see that leading up into this trade lasted. This was the U.S. session was closed, and so the start of Asia session uh, began. And you can see that leading up to the report. So the rate announcement had not even been made yet, but we see that price continues higher, and then it has a very quick pullback, and this is multiple hundred pips.
Mm-hmm.
Okay.
Yeah.
And so if you're improperly positioned, or if you're trading news, that could really just really devastate your account very fast, especially if you think that you're a know-it-all, or just that everything is going your way, and you're adding to the trade at the wrong time. I know that a lot of myself, when I was new to trading forex, I wanted to add on uh, on either pullbacks, or add on positions that were currently in my favor, and that would just continue. I would just expect that they would continue going. But then something like this would come along, and it would have a very quick pullback, and then ultimately result in a failed trade, because I would be stopped out, or I would be completely liquidated. And so uh, I think the goal for me now is to wait for uh, a confluence of events to happen, and that I never add when I'm at the very top. I have
Mm-hmm.
to add when the RSI has come down, when I have a positive slope, and we have a price that's either selling, and we have a positive slope, as I was showing before, or we have a price that is flatlined, or a price that's going sideways with a positive slope. And so all of these events kind of form the trade. It's not just one thing that I'm looking for, although to enter the trade, I do have to be on a technical basis, because I do have to use my stops wisely, and I can't try to over leverage all at once, because that could really just devastate the account. And so I want to protect my investment. I want to protect my account. I'm planning to grow this account, and I want to just ensure that I'm being a safe trader. I don't want to relive the experience, 10 years ago,
Mm-hmm.
when I unfortunately lost all of my wife's money. And so those were the hard lessons that I don't want to repeat. And I strive daily, almost on a daily basis, to have a checklist of what I should be doing and what not to do. It's always a struggle, just because I've earned a lot, but these lessons are almost a scar that I wear
Mm-hmm.
on a daily basis, that I always remember. Is this the day that I lose all of my account? I don't want to repeat that. And so every single day, I'm very strategic in terms of what I do, and uh, make sure that I place the appropriate stops and try not to over leverage the account, just because of the, like I was pointing to earlier, we can have these moves to the downside, even though on the monthly chart I know that things are going higher, and we have the rising rates because of things like this, where you have a move that's 200 pips to the downside. That could really devastate you, especially if you're entering here, unknowingly. And so that's kind of where my focus is with trading on the FTMO platform.
Okay. All right. Here in your account matrix, we can see how you have progressed to the payout. Now, I have noticed a few interesting points regarding the statistics. So the first of all is the high risk reward ratio. So if you scroll down a little bit to the statistics, I believe it is around 20, which is a lot, and which is something that we like to see. So could you tell us a bit more on how you calculate your stop losses?
Sure. So my stop loss is generally based on the positive divergence that's seen on the RSI and the MACD. And if I can enter on the trade, so let's say with the euro Japanese yen, if I could enter on a trade that's currently moving sideways, but we have a positive divergence in price, I would enter here. Let's just say that this would be my as just an example, that we're entering this trade and we have a positive divergence. I would either wait for a second pullback or a third pullback, and then stop loss would be 25 pips below this entry. So you could just easily calculate, 25 pips. So this would be, from this area, let's just say from 96. So we'll go 137.70. We'll go to this area, and so that's very reasonable, and it's just, it meets my checklist of of the entry that I'm looking for, with a very reasonable stop loss. So it keeps my risk low, and my return, or the profit potential, um, you know significantly higher. So that's kind of what I'm looking for. I'm looking for these low risk entries with the positive divergence.
Mm-hmm. All right. Okay.
So I'm sorry. I also just wanted to add to this, that the fact that we have the risk to reward ratio on the account, so high, it's really a representation of, the low risk entry, and then allowing the trade to run, based on the Fibonacci tool that I have, that I use for my take profit opportunities, or the wave analysis that I was pointing to earlier on
Mm-hmm.
the US 500 trade.
Okay. I assume you do not really move much with your stop losses, but how about with the take profit? Do you adjust to take profit as the market develops?
Sure. So I do like to take profit, manually. So sometimes, if I'm not seeing the trade, or if I know that the trade is going to take some time, I would enter a manual take profit. But I typically don't take profit right away. I allow the trade to work itself out, and then I look for these areas of take profit opportunity after the let's just say that I'm using the Fibonacci tool. So if we have a pullback, and I buy this pullback, we would have a take profit here on on the 100% extension, and then I'll have a second take profit. And then if I have additional positions, I'll take profit on those manually, because those might have, like this wave here. So this is a Fibonacci tool that I'm using to take profit, but also I will use this entire wave, and I'll just put it right back up, and I'll take profit on a third, opportunity
Hmm.
somewhere over here. So I'll use all of this together, not just the Fibonacci tool, but all of this wave, to take profit. And so that's how this high risk to reward ratio translates, or how you can see this, effectively playing out.
Okay, okay. Now, if you scroll down a bit to the trading journal, that's another thing that really caught my attention is that as we can see, the trades, particularly the ones on the US 500, they have been held for a couple of days, but they also have a lot of trades that were held just for a few minutes, right? So usually people are either, scalpers or trade intraday, or they hold the positions for a longer time period. It seems like you're doing it all. So how does that work for you?
Sure. So sometimes I like to hold a trade and either add to it, or I need to scale out of the trade because I would like to secure some profit, versus holding it the entire, uh, or the duration that I kind of expected to hold it for. So let's just go to the US 500 chart and kind of see what I was looking at on the this would have been on the 4 hour. So here we have a immediate sell off that, that's obviously, uh, kind of confirms my entry to sell. And so on this first candle where we sell down, this could be the first wave that I would take a partial at, right? Because we have all of this movement, right? All of this consolidation area. This would be the first movement. So you could take profit anywhere right here, and then just let the rest ride. Because if you are looking, or if I was, because I was looking at the S&P 500, and we had the gaps in price, that uh, that was just another area for me to target. So it wasn't reasonable for me to secure all the profit right away, because my focus isn't the short term. Although I wanted to secure the very short, the short term profit that was made available almost immediately as we continue to sell. So it's just me taking advantage and protecting my account from any loss, or from that possibility, just because we never know what the market might do. Will it sell down and then continue higher, and then sell back down to my expectation? So it's just something that I'm not always confident in,
Hmm.
although I trade like I do have confidence. But just because of those factors, I need to protect the account, uh, to make sure that I'm just being responsible, and taking profit where the opportunity presents itself. So on this first wave, and then as I was expecting that this entire wave would continue lower, and so that's kind of where my target was, along with the gaps that I was already targeting. So it's really a culmination of things. We have the gaps on the S&P. We also have the waves on uh, on the US 500, along with the Fibonacci tool that I'm using.
Okay, so if I understand it correctly, if you spot an opportunity to take a trade to enter a position, you're pretty much always using partials. You pretty much always scale in or scale out.
That
Hmm.
is correct. Yes. So I like to scale in with partials, because if my entry is right, then I shouldn't fear a drawdown that's going to, or I shouldn't fear buying at higher levels, because if I understand that, or if I have certain market expectations, then that will continue, and that's going to also be, if my analysis is not right, then that's going to be proven by my stop losses. Then I'll have stop losses, for those partial entries at higher, at although at higher prices, they would still be respected, at the 25 to 30 pips below the entry. So that's the way that I entered that trade. Just because here we can see, as an example, let me just delete this wave here. So with this Fibonacci tool that I used just as an example, if I'm entering on this wave count to the 100% extension, if I enter here or if I enter here, my stop loss would always be accordingly set to to 25 to 30 pips. And then just because of the positive slope, my take profit would be at the 100 extension no matter what. So I don't really fear the rising price as much as I fear getting stopped out at such a high lot size. So let's say I put on a just a massive amount of lots initially
Mm-hmm.
and I get stopped out. That means that I've completely uh, maxed out my opportunity to be able to take this trade to the upside if that was my intention. Because let's say that I was stopped out on this like little wick because my entry was just too soon. You know, very often I've had situations where I have the right trend, but I enter too soon. And because I've entered too soon with too high a lot size, that just completely takes me out of the trade and I can't participate in any of this. And so I've just learned to be strategic about my entries, be more patient, as I was originally saying that this really has taught me to be patient in terms of the trade working itself out, and not everything is going to happen at the same time. So just allow for these pullbacks to happen naturally as they occur. Sometimes, we see the spikes in price when we have economic news, but I let all of that kind of work itself out, and I would enter, let's say, for an example, we have market news for like the yen pair, where the interest rate is going to be announced. I would let that play itself out, and if I'm going to buy that pair, I would like for that news to preferably sell the price. That way I can get the entry.
Mm-hmm.
And so I wouldn't enter all at the same time in order to trade that into the news report. I would rather wait for the volatility around that news report with a smaller entry before that, that could allow for the room that I need to be able to participate in the trade, although not with the full lot size that I want, but at least I'm a participant. And so I'm not really missing out on the trade. I'm rather protecting myself from losing losing the account. So I'm more strategic in terms of where I would get the entry or where I would like to build the entry around. So that's really what the focus is.
Okay. Well, final question before we move on to the final part of our today's interview. I saw that you are trading pretty much during the whole day. So do you have like a favorite session, or can you find opportunities to enter pretty much at any time of the day?
Sure. So I really love the London session open. So anytime surrounding the London session open, I would like to just give an example on a pair that I'm looking at for, let's say, the 15-minute chart. And so this is going into the London session where we have a positive slope, and here we have kind of a area of consolidation, right? We have this was on the GBP pair yesterday, and so I'm looking at this, and we have a rising RSI, and we have higher prices. And so this area of consolidation during the Asian session preceded the London Open. And as soon as we get into the London Open, so London hasn't even opened yet, but we see the volatility surrounding it. And so I love this session here uh, during the Asia session trading. where it kind of gives you a range that you can trade into. So we see that prices are moving sideways, and then it kind of takes you out of this whole entire range with this candle, breaking out of this. I guess you can call it a box or a rectangle, and then price comes back into the rectangle and then ultimately continues higher. So that's a session that I really love to to trade, just because all the events that surround it, the preceding session during the New York and the previous London Open had created an ample opportunity to see that there is a trend that's already developing. And so the Asia session, so if I missed out on all of this trade, the Asia session would have allowed for me to get an entry into this entire trade. You see here how all of this trade kind of goes sideways, and we have a indicator on the RSI 12 and the MACD that's sloped upward. And so all of this here creates the opportunity for an entry into to enjoy the London breakout, I guess you can call it, where the London session gives you that volatility. The Bank of London opens up and starts processing all those orders, and so all the inflow that happens, that's not even affected by the interest rates, but them just simply converting currency over, uh, allows for this all of this movement here to play out the following day. So that's really what I love is the London session and the volatility that surrounds it, and you can take profit. So let's just say that your entry was somewhere somewhere in here, and you're using the Fibonacci tool. So here you would have your first entry, or I'm sorry, your first wave, and then you have a pullback, and so this would be your entry because you have a increasing RSI, you have a positive slope on the MACD, and so your exit would be right here on or into the Asia session,
Hmm.
right? So you could use something like this, or you could also use it during the London session open, where you're actually given the same kind of a market structure that is very similar in nature, but is created during the London session that gives you this volatility, and so you could really capture those profits fairly quickly, and then be out of the trade and just enjoy your day with your family, or do other events that you have time for, the
Yeah.
other interests that you have in your life.
Okay, lovely. Okay, so Paul, you got the payout. So what are the plans for the future? I think right now you're trading on a $300,000 account, right?
Yes, I am.
Okay, so what are the plans?
Sure. So I have a lot of plans, a lot of plans that will hopefully carry me out into into the next 5 year to 10 year plan. With FTMO, I want to become a trader that has grown my account with the ability to scale up
Hmm.
in my account size. So I plan on keeping the $300,000 account, and just grow that with the program that FTMO allows, and just continue to be a responsible trader. I try to take my partials and let the profits ride with appropriate stop losses in place. And if like I said, if a trade is going to go my way, then I shouldn't have any fear in taking trades at a higher at a higher price point, and just continue to operate that way. Just not to have fear, to have a appropriate stop loss in place, and no matter the conditions of the market will always be there.
Yeah.
My my own, I guess, my own, um, uh, I'd like to say, I guess, my own uh, mental state might need to adjust to the market conditions.
Mm-hmm.
And so I may need to, at some points just stop trading for a little bit to, to evaluate where the market is headed, in the next, the next few months. But it's okay. I don't always have to trade. I don't always have to feel like I'm trading.
Mm-hmm.
I need to also just give some time to myself to to enjoy the profits too.
Okay. Um, I've asked this question in the previous interview, and I want to ask it again. So, obviously, you do have a lot of experience, but we all know that nobody's perfect. So, if there's something you need to improve on, what would you think it is?
Sure, it's really focusing on the lot sizes that I get when I initially enter the trade. So I always even now I try to manage my initial entry that I'm not over leveraged, and so I try to, but I also don't want to miss out if that's the low or if that's the top and I'm selling from the top. I don't want to miss out on that opportunity to get the perfect trade right. And so it's really just, it comes down to the emotional decision rather than a financial decision of being able to just uh, not uh, not lose the trade
Mm-hmm.
by over leveraging. And so really just picking the right leverage and just being okay with adding to the trade. And if I were to get stopped out, that it would also be okay. So it's just living through that and learning that all of this is just one journey. It's not a make it or break it situation,
Mm-hmm.
because market is going to be there tomorrow. And so the 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 key for me is to be responsible with the trade and to be strategic with my entries, is as I was talking to you to you about entering on pullbacks. If I'm going to to buy a particular currency pair, that I don't want to enter too fast too soon. So it's just managing that original emotion that I have
Mm-hmm.
with my first entry, and then just managing my expectations as well for the trade, and then just enjoying the profits if that's the reward.
Okay, so not to get too scared, not to get too greedy, just remain rational. Is that something that you meant?
Yeah, that's a good summary. It's just being rational. That's such a good way to say that, because we all make irrational decisions,
Yeah.
and even with all of my trading experience and what I don't want to do, sometimes I end up doing. And so if I do that, and if I catch myself doing that, it's just I have to exit the trade right away, or I have to reduce or just scale out. Um, and so that's really the you hit it right on the nail.
Mm-hmm.
It's just being rational with the trade.
Okay. Now, I imagine there's a lot of people who are in a very same situation or similar situation as you were several years ago, just fresh in trading, maybe few lost accounts, but they feel like trading is really a way to go. So what would be your advice to those people? Because again, I'm sure there's a lot of them watching.
Sure. So there are so many different
Yeah.
strategies that a lot of experienced traders have posted on YouTube or on other platforms, and each strategy has its own pros and cons. And I'm sure that if that particular strategy works, then they'll be able to realize profits from that, and you'll know very quickly whether or not that strategy is suitable for you. But it's to try out the different strategies, and then also to not give up on failing on
Mm-hmm.
the failing strategies, right? Because I had initially lost a large sum of money, and I didn't want to be I didn't want to complete that part of my life in a failed experiment. Some experiments are designed to be failures so that we can grow from them, and then to have success from that. And so that's kind of what I did is I grew from the failed experiences, and I learned what not to do.
Mm-hmm.
So it's that I now know what to do, but I'm also keeping a good eye on what not to do that I was constantly doing. And and that was, I got the trade analysis right, but my entry was too soon with too high a lot size, and so I would lose that trade altogether. And so it's just being, like you said, being rational with the trade, and just being patient and letting that trade work out. And if you enter with a low lot size at in the beginning, and if it's going to go your way, then you'll end up in a profitable situation where you could also take advantage of the profit opportunities, and just paying yourself. If a,
Mm-hmm.
if a trade is going your way, make sure that you're paying yourself constantly. That is a key to just growing the account. If you're not taking the partial profits, that profit could soon be wiped away very quickly if things retrace, which constantly happens in forex, where you have retracements all the time. And so it's a series of waves. And so if you understand that entry um, is not a one-time entry, take profit, and you could always find another entry. So just enjoy the profit. That's really the key there.
Okay. One more question that just came to my mind. Maybe it's not really too related to what we've been talking about in the past
Mhm.
few minutes, but as we were mentioning the rising interest rates, I would say that we could probably both agree that the current situation on the forex market is quite specific and different than, for example, 4 or 5 years ago. So, I mean, do you think that's true? And how would you compare the market is evolving? Let's say the way the market is in the current state, and let's say 4, 5, 6 years ago.
Sure. So the market is definitely a radical, has taken a radical change since we experienced 5 to 6 years ago, even 10 years ago.
Mm-hmm.
Um, and so we do have a market that has rising interest rates all over the world. And so to combat this inflation, um, certain currencies are going to be in fact impacted a lot more than others. So we can see how the yen is impacted very clearly with the rise in interest rates. And so that's why I was really focused on the euro JPY pair, and now also focused on the GBP JPY pair, just because we are living in this new environment where we have this rising interest rates, and so we have something to expect and look forward to, especially if we're looking at the the commitment of traders report that helps us understand how our larger traders, the banks and hedge funds, positioned. And am I positioned with with the group, or am I trading based on my own assumptions, or my own ideas about where the technical side of the trade is? So it's really you're living a new environment with the rising interest rates, but it really is the same environment throughout. The commitment of traders report has been around for a long time, and it gives us the idea of what we can expect. So
Mm-hmm.
if we have that constant, and we have something new that's added, we can just add that to our constant, and just continue to run with that. So just using all these tools, and the rising, in this new inflationary environment, should really empower us. Even though everything is radically different, the world is changing so fast, as far as currency is concerned. And we've seen Bitcoin crash, and so a lot of things have been wiped out. But there's opportunity everywhere with with this new inflationary environment, for me at least,
Mm-hmm.
that I can clearly see uh, played out on the chart. So not everything is technical. There are so many things happening behind the scenes with the economic news, with the COT report specifically, and then seeing that translate on the chart is just it just creates just the masterpiece that any trader would love to see.
Okay. Yeah, I mean, I guess as we were mentioning, the history keeps repeating on itself, right? The what we see now, the rising interest rates, maybe it's something that we haven't seen in the past 5, 6, 7 years, but it is certainly something that we have already seen in the past 20, 30, or 40 years.
Sure, exactly. So we haven't had such a large or dramatic change in increase rates and interest rates since I would say maybe 30 years or so. And so I definitely think that this creates a condition that back in the 70s and 80s would have been if we were allowed to trade forex back in the 70s and 80s, that was not something that was available to the retail trader. But if that was available to us back then, and we relived the same situation, I think that and we had all the tools that we have now, right? It would have been such an amazing trade to take. But we can also learn something from hindsight, because we can see how a rising interest rate affects currency pairs. And so it doesn't really take a technical trader to be profitable in this environment. You can just see from the economic news reports and how the world governments are raising interest rates, that it would undoubtedly affect certain currency pairs more than others. And so this is why I'm focused. I'm staying committed to the trade. I'm looking for these particular sequences to play out on these indicators that I'm using, and just being rational and not expecting too much too soon, and trying to make all that profit in one day or in one week. I know that some things are going to play out in months. So we're
Yeah.
going to have continued interest rate hikes, and so we're just going to see that play out on the charts.
Okay. Well, Paul, real pleasure to talk to you today. And if you want to have any last word, anything you want to shout out, anything you want to state, any last words, now's your time.
Sure. No, it's just been a real blessing to be a part of the FTMO trading community. I've just been profoundly blessed by all the support that I've had, the customer service aspect, to just being able to chat online about my account was very very helpful. So this was really what kind of uh, what solidified I guess uh, my initial desire to look for a funded account by a brokerage firm. I tried out so many, and I felt like FTMO really had a solid platform. The intuitive design of the matrix, everything was very easy. So yeah, it's just and then also the scaling program with FTMO is just another thing that I'm excited about. I'm looking forward to staying on in the future and just growing the account. And so I have nothing but positive feelings about the growth aspect with FTMO. And then also the other side of that is for traders that are failing, there's also all the all the extras, all the coaching sessions that are available as well through FTMO. I mean, you guys have really helped the average Joe get a entry into a forex market opportunity that otherwise does not exist. And so just that on its own is just invaluable.
And that's FTMO.